And for more on this story, we're joined by the Zeda Group CEO, Ramasela Ganda, to give us more on the company's plans. Ramasela, thank you very much for your time this evening. A great performance really coming from the relisting on the JSE a couple of months ago. This is a good showing by this particular company. But Zeda has decided that you're not going to be paying a dividend. What's the reason behind that?
Thank you very much, Xolani, for having us this afternoon. Yes, I think one of the key issues when we look at our performance in the last 6 months, we were as newly listed, as you call it, relisting, as we went back to the JSE, was really to focus on making sure that we reduce our debt. I mean, we had commitment with our legacy debt from our former shareholders to make sure that we reduce it. The challenge with that debt was that it was coming at a very high interest rate. And at this time where, we saw a very, high interest increase. I mean, what we saw last week as well. So ours was to really get out of this debt. It's the worst debt that we have. I mean, it is at prime +1. So for us, it was just making sure that we manage the impact on it. I mean, at the moment, as we're looking at it, we continuously assess our position to see what what happens in the next 6 months. But the focus now was to just reduce the impact on our earnings by reducing the interest charge on our debt.
A remarkable performance indeed, but still some sections and units of the company are still below pre-pandemic levels. Talk to us about those.
What is encouraging, I mean, if you look at those areas that are pre-pandemic, I mean, during COVID, we've introduced subscription product, which was saying, we need to diversify our portfolio. We don't need to focus on just one segment of the business as we were before COVID. So our revenue has already surpassed pre-COVID level, but from an activity point of view, I mean, we have inbound still below 50%. And the biggest driver of it, I mean, if you look at the airlines, that, not all airlines are back to start with, and the capacity is not the same as what used to be pre-COVID levels. So it's really looking, and the challenges that the world has been facing when we look at, the tourists that have come to South Africa is not in the same proportion as they used to. So which means that we still have an opportunity for inbound to improve as more airlines come on board and more capacity grow. But quite, good was what we saw in our corporate book, that, we see many business now starting to travel. For the longest period, everybody believed that business will be doing meetings virtually, and there will not be. But we are seeing more and more. I mean, what was surprising to us was to see how long corporate took in December, that, the book ran up and towards the end of December, and that was just encouraging. So we still believe that it's just a matter of time before corporate surpass pre-COVID level, and inbound, the economic condition are the key driver for anyone to travel to South Africa.
Indeed, and it seems like the decision to venture into the heavy commercial fleet in terms of leasing, that has stood you in good stead.
It has indeed. I think in 2021, when we look at our business and diversifying into different product, I mean, heavy commercial was one opportune moment, because, one of the biggest way of financing heavy commercial has always been high purchase. And we've just really aggressively gone into this with a product of leasing. And that has really improved our revenue per unit, by 12%. Our cost structure remained the same, but all that we did was just add on the top line, which has been a good business. And we believe, with the challenges that we face with regard to freight transportation, we have seen an uptake on what is happening with the road freight.
You are also reviewing some underperforming units. Talk to us about those.
So, I mean, we've been doing this since our 2021 strategy deployment, and looking at businesses like our Mozambique car rental business. Since time immemorial, this business has been making losses, and one of the key issues that we looked at was how to turn it around. I'm really happy that looking at the interim results, Mozambique has turned from a loss making to a profit. And the key driver, among other things, I mean, we removed, we moved from the airport. I mean, as a car rental, everybody else believed that we should be at the airport. But what we do in Mozambique, we just shuttle customers and we deliver vehicles to them, we don't have heavy costs. The second biggest one that is a challenge is the Ghana operation. Ghana, looking at the economic challenges in Ghana, interest rate, inflationary against us, and exchange rate, we're seeing a big impact on our numbers coming from there, and we're busy with initiative to be turning around because most of our expenses are in dollar and our income are in cities. So we're looking at the hedging approach in that environment and, deploying a lot of initiative, new leadership and everything that really can help us win the game there.
Indeed. The consumer environment, which you've touched on, is going or is expected to remain challenging for the rest of 2023, what not with the inflation and interest rates on the rise. But you are optimistic about the outlook and the state of the economy.
No, we are. I mean, let's take, for example, the inbound market. As the rand continued to depreciate, not that something that we would like to do, but the reality of it, a depreciating rand makes South Africa an attractive destination because it becomes cheaper. So that is one area that you can also look at as an opportunity. And when you look at just all the businesses that we're talking about, with us just managing to get the interest rate, coming down, us looking at, growing a top line on heavy commercial, based on, the need for transportation to continue moving. And, what exchange rate might even do, no one knows where the price of new cars will be. And that also gives an opportunity for our used car business. So looking at all those, there's a lot of downside, but equity, as we say, cautiously optimistic that we still see opportunity in this market. And as we say, when you operate in emerging market, you're bound to face these challenges, and you just have to be geared and build the muscles to be able to, emerge strongly after every hit of interest rate hike, rand devaluation, and the economy that is really unstable.
Ramasela, thank you very much for your time this evening. Ramasela Ganda is the CEO at the Zeda Group, and they are a mobility company, and making sure that they are recovering from the onslaught of the COVID-19 pandemic, which rendered the car rental business really on its knees when it came to that activity.